China's fastest growing coronavirus outbreak took a startling turn for the worse overnight. Health officials confirmed more than 15,000 new cases in just one day after switching to new diagnosis methods. China's death toll rose by 254, reaching more than 1,300 people. So that more than doubled the previous highest number of deaths in a single day.
Doctors in the U.S. have confirmed the 14th case of the virus in this country, and the patient is quarantined at the Miramar Marine Corps base in San Diego after being evacuated on this flight from China last week. American companies doing business in China, including Ford and Apple, have closed factories and retail locations because of the outbreak. Supply chains for products from cars to smartphones are disrupted, and flights and cruises are being canceled. CBS News business analyst Jill Schlesinger is here to show us what this could mean for consumers and our investments. Jill, good morning.
Good morning.
So loss of money doesn't compare to loss of life.
Of course.
However, this is a broader and still growing impact.
Absolutely. I mean, and I think that it's really important to note that, you know, we're talking about this because there will be real people on the ground all over the world who would be impacted by this economically.
So how will it come back and hurt consumers?
Well, I think there's a few different ways. We know that, as you said in the introduction, that there are a lot of American companies who get parts for their various devices in China. So I know we think about Apple and the iPhone, but also think about maybe your VR Oculus headset. Maybe it is a game console. There's also some really interesting evidence that the healthcare sector could be impacted.
Yeah.
We get a lot of drugs and medical devices from China, so that's incredibly important. We know that car makers get a lot of their parts there. We know that Tesla's could actually see some production
So it's
problems.
clearly affecting the American companies here. And what should they do?
And the question is whether they're going to pass along any increase in costs to us, and that's really the question.
And it will depend how long they have to shut down.
That's exactly right. Now, the other thing that's interesting, there's sort of like a good side, bad side to this, because obviously China consumes a ton of oil. So oil prices have been down. That's not good for a U.S. oil producer, but that's very good for consumers. We saw actually gas prices down by 12 cents in the month of January. So there could be a silver lining there.
If you're worried about your 401k, should you sit tight for now or start making moves?
Well, first of all, the stock market closed at all-time highs yesterday. So investors are basically saying, look, this is not a big deal. It's going to be short-lived. We'll see what happens. I think if you are a long-term investor, you do nothing. You stick to your game plan.
Yeah, but China spends a lot of money here. If China tips into recession, does that come back and hit us?
It could. Right now, economists are expecting that Chinese growth will drop from about a 6% annualized pace to 5%. Here in the U.S., the numbers are not nearly that significant. We're talking about a tenth, maybe a 0.2 of a percentage point of growth. I think the big issue here in the U.S. is certainly the travel industry is getting hit very hard. Chinese come here to the United States and spend a lot of money. Some estimates are that they will now spend about $6 billion less on tourism. So that hurts people on the restaurant industry, the tour industry. It is incredibly important to know that these things are likely to be short-term, but if it goes on longer, we'll be back here talking about the impact.
Potential impact, yeah. But again, nothing as serious as the potential lives lost here.
Indeed.
Jill, thank you so much.
Sure.